taking over.
Welcome to another episode of the Urban Retrospect. My name is Scott Jones, coming at you in Hendersonville, Tennessee from Louisville, Kentucky. Before I go any further, I want to introduce you to my co-hosts here. I'm going to start from my left. We have Ken Cloud up in Cleveland, Ohio. We have Big G. Where in Ohio are you? Because I know you out there saving people.
Dayton.
Oh, nice. Okay. Well, thank you for your service.
Hope your loved ones ain't in his hospital because he recording the podcast right now.
We have Simply P. Yeah. Down in Panama City. We have Wes, Big Wes in Mount Juliet, Tennessee. And then at the bottom here, we have Ramsey J down in Nolensville, Kentucky. But before I go any further, Ken, please remind our viewers, and thank you viewers for being on here, but remind our viewers and everyone popping up for the first time why we're here.
All right, guys, why we're here. We are here. Initially, we started this podcast in 2020 to highlight Black-owned products. We're all sitting around one day. We want to figure out how we could best show our impact, our economic impact as a people, as Black and brown people. And it was to highlight Black and brown products. So that's why we're here. But we also critique and we say, hey, listen, we're not just going to do it. We're not just going to support just because you're Black or brown or whatever. It has to be a quality product. Then we got into highlighting Black-owned service providers, which is why we're here today. But instead of me going on ahead and explaining that, I'm going to throw it back to Scott. Scott's going to let you know where we can be found if you want to see more about us, our lives, the shows, everything.
Good stuff. Thank you, Ken. And towards the end of the show, if you like what you're watching, please go ahead and hit that like button and hit that subscribe button if you haven't already, and share it to your friends and family. You could also catch the Urban Retrospect on Facebook, Instagram, as well as TikTok at the Urban Retrospect. Catch us on Twitter at Retrospect1619. If you want us to review a product or if you have any questions, please shoot us an email at theurbanretrospect@gmail.com. And lastly, if you want to find out a little bit about us, some of the other products and services and more, catch us at www.theurbanretrospect.com. So, before I go into introducing our guest that we have today, I'm glad that you brought that up, Ken, as far as how we got together, because one person that was on that call when we got together was the person that we have here as our guest tonight, and that's Mr. Celestia Ware of the Ware Insurance Agency. Now, he started the agency about 4 years ago as we were rolling this out. So he's been busy, and what he's doing is providing clients with a variety of insurance needs and giving them that safety net of coverage. Now, his background has prepared him to serve the needs of the community, and his claims, operations, and underwriting experience have given him the insight to guide and advise on the appropriate coverage, which is why we invited him to the Urban Retrospect to talk about his business and the importance of having insurance. So without further ado, Mr. Celestia Ware of the Ware Insurance Agency.
Yeah, I done gave you the Obama introduction.
Yeah, he did.
Hey, thanks for joining.
A few things out, but it's all good, you know.
Yo, baby, yo.
Hey. That boy good, man. That boy good.
That's right. Brother Newt. So I'm gonna jump into questions, Brother Ware. We're gonna start from the basics. Can you tell our audience and educate our audience what is insurance?
Okay. Insurance. It's a broad word, right? A lot of people, especially in the Black and brown community, don't truly understand it. But in simple terms, insurance is designed to make you whole, not better. So what I mean by that is if you go out here and you wreck your vehicle and it's a 2014, it's not to get you a 2024. It is literally to put you back to pre-existing conditions, not better, not worse, or right back where you were. So a lot of times when people, when they think about their insurance, they don't really think about the magnitude of what that really means. All they're thinking about is I pay this premium every month and I deserve to have this. That's not how it's designed, because insurance is a shared risk pool. So a bunch of people buy into a product, and insurance companies, banking, are hoping that when that time for us to deliver, we deliver on your need. Once again, I will repeat, it is to make you whole, not better. It's to put you back to pre-existing conditions. That is what the purpose for insurance is literally designed for.
I appreciate that. That gives us context of what we're going to be talking about today. So tell us a little bit about some of the insurance products that you provide.
I'm a full service insurance agency. So I do home, I do auto, I do life, I do bonds, I do small business. So basically anything that's insurance related, I can pretty much write it. So we're full service. So we handle from, like I said, from a small business owner to a local store that you see on the corner store, to homeowners, to autos, to life insurance. We do it all. So when you see somebody that said they're a full service insurance agency or a full service insurance company, they service everything. There's not nothing that comes into my office that I cannot write.
So my question is, how does auto, home, and life insurance coincide with another? And please share with the audience the importance of each one.
Okay. So the best way I can put that is your home is basically your vehicle of driving wealth. Okay. Most of us did not grow up in that 1 percentile. So that 1 percentile of just inheritance of money just being passed down generation. Most Black and brown people, and even some of our Caucasian brothers and sisters, because there's actually more Caucasian people on social service program than there is African American. Your first home and your second home is where you start to attain wealth. So when I'm talking to a family, I say we got to look at the big picture. My goal is to protect your assets, literally, because I don't want you to go out here and do anything crazy that's going to cause you to lose everything you work for. So most of the time, and I don't want to make this too dry, guys, because insurance is not sexy, but I'm going to make it sexy tonight for everybody can connect the dots. It's literally when you think about your auto insurance, and typically I tell all of my clients, your auto limit should be at $250,000 per person, not to exceed $500,000 from a bodily injury standpoint. Let's say if you go out here and you kill somebody, or you permanently injure them where they're no longer to have the quality of life that they once had based on your negligence. They'll go out and get let's say a Bart Durham or one of these ambulance chasers, Ponce law firm. You get sued. That attorney's going to go after your limits. He's going to go after that 500,000 limits. Now, here's why I tell that person how the umbrella come into play. Because now if you kill that person, they're going to get that 500,000. Now you got another $1 million on top of that. So in the grand scheme of things, you got $1.5 million in coverage. So that attorney's going to get that initial 500,000 from your policy because the family's going to be awarded that. They're going to get another 800,000 out of that umbrella. Mr. Bart Durham's going to get his 200,000, and guess what? You get to keep. You get to keep your home. You get to keep your 401k. You get to keep your stocks, bonds, whatever you got invested. Now, if you don't have that, then you've got exposure on the table. Now, Mr. Bart Durham can come in. They can file a lien, put a judgment. People say, well, you can't get blood from a turnip, but you can squeeze it enough to get juice out of it. So it's one of those situations where people got the importance of making sure they got the proper coverage, because in the grand scheme of things, that auto you get in can literally cost you your home. And the beauty of having an umbrella to the home perspective, let's say you have somebody to come over, they get injured, they slip and fall, they get hurt, they can go out and sue you. That umbrella is going to give you an extra coverage or that extra liability protection to protect you so you don't lose everything you work for. Even down to this, people don't even think about this. When you look at your auto coverage, to me, the big ticket items is the property damage and the bodily injury portion. Let's say if you go out here in the property damage and you hit somebody else's vehicle. I'm gonna use my favorite example. You go out here and you hit a row of G-Wagons, the most expensive SUV that Mercedes makes. Let's say your policy only covers $50,000. Guess what? Now, where's the rest of that money going to come from? if you're one of my clients or Gloria clients or Dwayne clients, well, we're going to tell you, you need to have at least $100,000 in that property damage coverage. So guess what's going to happen now? Now that umbrella is going to come into play to protect you. So a lot of folks, when I see people, when they're buying a home, they're all excited. Oh, I'm going to get this home. And then I'll see their auto limits and they got state minimum. So you got to understand, and in the Black and brown community, we're just not taught that. We're just taught about we need to have insurance and I need full coverage. And I'm gonna tell you guys this: there's no such thing as full coverage insurance. So when people call me up all the time, they say I got full coverage insurance. I say no, you don't. They don't have such. Insurance is kind of like an a la carte. You can buy what you need. You can buy what you want. You don't have to have uninsured motorist protection depending on what state you live in. You got the only thing you got to have from an insurance standpoint to be legal on the road is property damage and bodily injury. Everything else you choose, that's an option to have. But a lot of people, they want to go cheap or they want to go economical. And when you go economical, I guarantee you in my business, depending who you do business with, if you start telling somebody price, I say this all the time in all this different podcasts and speeches and interviews I've done, when you go price, you're going to lose coverage. And you may not feel it on the front end, but I guarantee you, if you have a serious enough loss, you're going to feel on the back end.
Yeah, but how much does all that cost, man? You make it sound good, but sometimes this stuff is equivalent to how much your monthly price is on your car.
Yeah, I mean, here's the deal. It costs, right? So here's my perception, and here's how I look at it. Because we all been there when I was,
Right.
young and coming out.
Right.
You didn't have the best coverages, right?
Mhm.
And now that I sit back and think about it, knock on wood, by the grace of God, I'm glad I didn't have a serious enough accident, because
Right.
if not, I probably would have a lien or a judgment against me and I'd really be in hot water, right? So you got to understand, you got to look at it from a budget perspective. Now, to come out there to get the 250,000, 500,000 and a 500 and 500, that's expensive.
Right.
But what's more important, paying, I don't know, $200 a month, $300 a month versus paying 3,000, 5,000, 10,000, 20,000? Because here's the deal. All of you on this phone, or well, not this phone, but this Zoom or wherever you guys are at, you all have stuff, right? You all have nice stuff. And you never thought about, what if I lost this stuff? Because guess what? You get up every day and you go to work and you have an honest living. But guess what? There's somebody sitting at home during the day watching The Price is Right, Young and the Restless, Ask the World Turn, and they're praying that somebody like you hit them so they can get a good payday.
Mhm.
And people say, well,
Right.
I will never be sued. It'll never be me. I got one great example. One of my clients let her son borrow her vehicle. He goes down to Atlanta. He causes a 3-car pileup. The young lady inside the other vehicle, she lost her hearing. Guess what? This family has a lot of means. And I kept pushing them to get the upper coverage, to move it up to the 255, and let's get the umbrella. But they said it'll never be me. And now this young lady has an attorney, and we have to send a note out, say, hey, basically, we're getting close to exhaustion of coverage, and you're going to have to seek legal representation. Now, your insurance company job is to try to mitigate that, to keep that from going to a lawsuit. But at some point, you got to take ownership of it. And a lot of Black and brown, and even my Caucasian brothers and sisters, don't have this, because we go into the mindset, I'm not going to pay all this money. This is not worth it. I'll never have a claim. All it takes is one time.
Yeah. It
See,
does.
to me, that's the tricky part about it all,
Right.
right? Because you're right. All it takes is one time, and you're gonna sit back and you're gonna say, "Man, I wish I had done this."
That's
Right.
insurance. That's
But
insurance.
then there are those people who, thankfully, luckily, never have anything happen to them. And then there are those people who have something happen to them. They thought everything was grand, and it's been very difficult to work with their insurance companies. Now, part of it, and even in listening to them, learning from you, is that part of it is they didn't have the coverage that they needed to have.
No.
The other part is that, I mean, it's a nasty game.
Yeah.
So let me step in. Hold on, Celeste. Let me step in though. One thing, Celeste, because I am a client of Celeste, is having a relationship with your agent. And that's the thing I think a lot of people don't get. I can tell you for a time, me working with Celeste has been a ease because guess what? I can call him and he'll tell me what to do instead of me calling farmers and figuring it out. Even though I paid my insurance agent, that's his job to help me walk me through the process. So I think having an agent that you can have a relationship with, or that's their job, that kind of help you guide you through the process. I'm sorry for answering your question, Celeste, but
No, hey, brother, hey, I need some help. You want to come on in here and help me move stuff? It's a testimonial right there. I'm gonna steal that and put that on my website. But no, all jokes aside, it's one of those situations, real talk. It depends when you buy your insurance. If you go to a 1-800 number and buy your insurance, you deserve what you get. Back in the day, you guys, we all was wearing Giorgio Bertini. Now you established black men will now wear $300 tennis shoes, and you guys are wearing $800 cowboy boots. Brother James, you guys are wearing Jordans. You wouldn't dare go to K&G and go in that back corner and get those Giorgio Bertinis. That's going to hurt your feet at the end of the night. So you pay for what you get at the end of the day. And it's one of those situations, if you're doing business with somebody and they're getting premium from you every 6 months or every year, and they're not sitting down and having these conversations with you about, hey, what's going on with your family? Has your family expanded? What's going on with your business? What's going on with your profession? Because guess what? You're obtaining wealth, hopefully, every year. And if your insurance agent's not having those conversations with you and you don't have a relationship with him or her, why in the heck are you giving them your money every 6 months or every year? If you got to call a 1-800 number, and I can't say their name because slander reasons, but the P and the G, in this world, they made it to now where you can just call 1-800 and say 15 minutes can save you 15%. Would you trust $600,000, $700,000? Let me even go lower. To me, if you got a $300,000 house, $250,000, you got a nice house. So would you trust our car, $60,000, $50,000, $40,000? Would you trust your prized possession, especially your house? That's going to be your vehicle to earn wealth. Would you really trust some kid or some person sitting in a service center working 3 to 11, 7 to 3, or a midnight shift to protect your interests? And every time you got to call them, you get a different person. Y'all about promoting local businesses. That should be a number one thing. If you ain't got nobody local representing you, what are you doing?
See this, I guess.
Man, that was a mic drops.
Yeah, he ain't lying. But I need a discount.
This helps me go into mine. And I like my Black history moments. But in the past, Black people were often courted by white insurance agents selling very expensive policies with little return. I've heard my dad talk about how they had a black ledger going from door to door. My grandparents or great-grandparents run to the door trying to give them 25 to 50 cents a week, maybe $5 a month for $5,000 when they die. You know what I'm saying? Now, my question is, what do you think has changed since then as relates to insurance?
I think it's changed drastically because, racism is still there, but it's hidden, right? And most of the times, as Black people, we are conditioned to think if we go into somebody's office that doesn't look like us, you're going to get better service. And so it's one of those situations where even us, it's a fear of us being able to share our information with somebody that looks like them, because you feel that you're going to be taken advantage of. You feel that this person is not going to give you that same level of service. So yeah, there's been times, and I got some Caucasian brothers and sisters, man. They some bad boys and bad sisters. They killing it. Now some of them I talk to and steal their ideas. But yes, at one point we was preyed upon. I mean, insurance goes back, and I sent you guys that article I did last year with the Williamson Herald. Insurance goes back to slavery. I mean, think about it. Our Caucasian brothers and sisters had a 400-year run on us. We already know that. But imagine you being a slave owner I'm making money off you when you die. I make money off you when I sell you. Oh, I'm gonna put insurance on the boat that's gonna bring you across the ocean. Every which way you go, I'm winning. And so we are not taught. Everybody on this call is probably the first generation that's probably going to see substantial amount of wealth. So everybody's not taught that insurance and how that is designed to put you on that next tier, because it's a forbidden taboo because we've been burnt. I've had people come into my office at 71 years old and they had a 20-year term policy and the policy expired. And the agent that sold them that life policy never called them back up and said, hey, why don't we consider converting this term policy over into a whole life product? Where every month they paid their money, every month they paid their money. And in my business, a lot of agents put their head in the sand when it's renewal season because guess what? They don't want to upset the apple cart. They don't want to have you going out and be like, well, I don't know if I want. No, if you got a relationship with somebody, that's their job, is to say, hey, we need to reduce this or add this or switch this around and make sure that we got you covered. But in our community, it's been a hidden taboo where it's almost like going to the doctor. We don't want to go see the doctor and we don't want to talk about insurance because we've been taken advantage of and we haven't been treated equally. Now, I'm not saying you can't find somebody that's not going to treat you good, black or white, but you need to have somebody that, you know what, going back to what Wes brought up earlier, you need to have somebody that you have a relationship with. Because guess what? I got a relationship with my CPA. I got a relationship with my banker. Hell, I got a relationship with the guy who does my eyes. I'm trying to win his business right now. So everybody who touched me, I got a relationship with. And if I don't got a relationship with you, I'm not doing any transactions with you. It's just that simple.
Yep. That's part of what I've even learned doing this since we started it. You know, those relationships matter. Look, so you mentioned a little bit ago that those of us on this call, many of our friends and family, we're going to be the first people to start really building some type of substantial wealth for our family. Can you go into how insurance impacts family economics?
Oh man, it's a game changer. Like I'm gonna go off the rail, but I'm gonna come back. Just a year ago, I had a lady, one of my restaurant owners had one of his friends call me. She literally wanted to get life insurance for her daughter. This lady has the money to pay for it. She just didn't like the numbers. Fast forward to 2024, she calls me up and say, hey, I would like to revisit that policy. I said, cool, we can start working on it. But in the midst of us working on that policy, now her daughter has a disease or some kind of cancer or tumor where she's only been given 6 months, maybe a year to live. She can't get a policy. There's no way she's insurable. Nobody's not going to give you a policy and we collect 6 months worth of premium or a year worth of premium. This kid's going to die and you get $50,000 or $100,000. So we don't understand that. When a kid is first born, what I want to say is 15 days after that child is born, they get the Social Security number. One of the things that I'm going to do for my grandkids is that I'm going to start as soon as my son says the next C, whatever, Ware is born. Well, as soon as that kid is 16 days old, I'm going to take out a life insurance policy on that kid. I'm going to probably put $150 a month away. So by the time when that little, whatever that C Ware is, gets to be the ripe age of 20, 19, 20, they probably got another $150,000, $200,000 saved up. But some of us listen to like the Dave Ramsey method, say, well, you don't need life insurance because if you die, everything should be paid off. Yes, that's true. However, you need something to protect yourself. And insurance is a great mechanism that can really take you to the next level. We got a universal product right now that you can put, what, $250 in a month. And by the time you get to, well, most of us on this call a little bit older, but depending your age, by the time you get to, let's say, 75, 68, somewhere around in there, 72, now you got an additional income of roughly anywhere between $9 to $13. That's additional income on top of your 401k that's tax-free on top of that. So people call me up all the time. They said, well, you know what? I want to get a whole life product. That's all right, cool. So I put the illustrations together and then they see these numbers. They say, oh, that's a little bit more costly. Now I said, well, why don't we consider doing this term product? Now, over time, we can take this term product, convert it over into a whole life product, and you'll still get the same thing out of it versus ho, 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 ho. No, get what you can afford, because at the end of the day, I don't want to put you in a product and 2 years from now you can't afford it, or a year from now it lapses. But we're not taught those things. So we missed the boat. And I'm gonna tell you guys, these past 4 years have literally changed my life, because I now sit across the table with people that got some serious means, and I sit across the table from people that are just in the middle, and I got some folks that are just working, right? And it just puts things in a total perspective. We take everything that we have for granted because everybody we hang out with is successful. And insurance can be a tool to take you to that next level if you utilize it the right way. Hell, some of us, all of us got kids. How many of your kids got life insurance right now? Don't answer that question. I don't put them on the spot, but just think about it. I got another client, kids on the spectrum, autism, having a hard time getting insurance because they feel a kid with autism can do bodily harm to inflict themselves, depending on where that kid is on the spectrum. How many of you got something outside of your job? So in case that good corporate job tells you, no, we don't want you no more, we don't need you here, then what happens? You know how many first-time home buyers I come across that come into my office and I have to be the dream killer because the realtor and the mortgage lender that sold them on this dream, you got this $250,000 home, but what do you have outside of that? So if you die, is your wife going to be able to stay in this house, or she got to go back to renting? Then I see this. I see mortgage lenders calls me up. Hey, this DTI, debt to income ratio, is really, really high. We need to get their insurance policy to the bare minimum. So you know what I call that? I call that a skeleton policy. So now this person, and they got a house insurance, but guess what? They got a $5,000, $7,000 deductible, and now when they get ready to go file that claim, if it's a tornado comes through, they don't have the income. But guess what? They got a house. Oh, they're not taught about when you buy a house, it's an appreciating asset. Every year it's going to increase in price. They don't understand that property tax is going to go up. They don't understand that home insurance is going to go up. But now they got a product that they really shouldn't afford, and they probably should have been in a townhome versus an actual house. So when you look at the dynamics of all the things that I just put on the table, it all depends on how you are sitting down and having those conversations. And if you are not sitting down with a true professional, you're probably leaving money and opportunity on the table, because we see it as, I don't want to pay it because I don't feel it's going to do what it needs to do, because insurance is a hustle. It's a scam. They're going to take advantage of me and I'm never going to get what I'm deserved. Bottom line.
All right. Well, tell me this. We talk about us, we're here, we're the Urban Retrospect. Are most African American families underinsured, or overinsured, or right at the right place?
Man, it varies. I'm a big Pivot fan. I love Fred Taylor, Channing, and Ryan Clark, right? And Fred always uses this slogan, and I've stole it: exposure leads to expansion. So it depends. If your family's been exposed to it and you grew up around it, more than likely you'll probably be okay. Like my son, no, right? My mom just passed away, and shoot, she listened enough, and we got a little bit of money left over from her funeral. So, exposure leads to expansion. I had to teach my mom that, and my mom has some years on me, right? So it's one of those situations where if you've been exposed to it, then you know. But if you haven't been exposed to it, you won't know. And by the grace of God, when I graduated from Kentucky State, man, I fell into insurance. I didn't plan to be in insurance, but once I got into it, I seen how broad it was, and you can make a good career out of it. I decided to do more into it, and I just been blessed enough to be around it since I was 22. Now I'm 48. So I've never done anything else in my entire career but insurance, but in different disciplines. So when we're talking about Black families, it all depends on your exposure level. But once again, how many Black families are exposed to financial literacy? How many Black families know about insurance? How many Black families really know about buying homes? How many Black families really know about their credit? And believe it or not, your insurance premium is based on all those things I just stated. Your insurance premium is based off your credit score. Your insurance premium is based off your zip code. Your insurance premium is based off your driving history. Your insurance is based off how many accidents or claims that house has on it that you're about to purchase. So there's a lot of moving parts that go along with that. But once again, how many of us know? I can't put a direct answer on that because that would be just bad data, me just putting out false information. But I look at it from an exposure perspective. What you grew up is what you know. And if you've never experienced it, then you probably don't know nothing about it. And you're just lost. Just hopefully you can figure it out.
That's why you need to find a good agent.
Bingo.
All right.
Like
I want you to kind of pick it back.
Let me cut you off, Wes. Let me cut you off. One thing I'll say is I'm gonna give him a shout out. My financial advisor, Sean Johnson, with Edward Jones. Sean got me when I was 22 years old, fresh out of college. Give me $100 a month, and I'll make that money work for you. I've been doing business with him since then. I ain't know anything about financial literacy, but guess what? He just pulled me to the side and just said, "Hey, give me this, and I'm gonna make your money work for you."
Now Josh just got a plug. Just
Right.
like that. He's mine too. It has been probably for about 20 years. So yeah, but go ahead. I'm sorry.
I know you touched on it earlier about kids having insurance, and you mentioned the one with the kid that was on the spectrum that can't get insurance. Can you get more in detail on how important it is for kids to have insurance?
I think it's very important because let's say if your kid gets a, and I'll talk about myself. I'll be 100% transparent with you guys. My son is 22 years old. He's made some decisions that you all know about that I may not agree with, but guess what? At some point, I still got to protect him because he still don't know what he needs to know. So what I ended up doing for him, probably I want to say it was either his junior year or his senior year, I can't remember. I took out a $500,000 life insurance. And the biggest reason why I did that is because he's getting older. You know, right now he's still trying to figure it out. So at least if he comes up with a illness, if something happens to him, he has 500,000 right now. Oh, let's see when he gets a job and he becomes a professional. What I'm going to do then is we're going to talk about how we're going to take some of this money, start converting this and making this money really work for him. The younger that kid is, the better it is. You know, I can't put his business out there, but I got a client on this call right now. We insured a couple of his kids right now. He got a whole life product and it's earning money for his kids right now. So it's one where you have to really sit down, and even if it's not me, get with somebody to sit you down who can explain that. And I think if you got insurance on your cell phone, you got insurance on your tablet, and your kids is walking around and you got something through your job and you're paying 10 cents every pay period to have them on insurance, but you don't have anything on your own outside of that, you're doing them an injustice, because what if that kid gets sick? And it can't easily happen. If they get sick, now they are uninsurable, because I have seen it happen, and now they can't get life insurance. But we don't look at it from that perspective. We just don't.
What is there a particular illness that you are insured with your son on? You can't just say he get an illness. Is there a certain illness that that's on that list?
It just depends.
It depends. Right?
It literally it just depends. Like I've come across kids with heart issues. I've come across kids being on the spectrum. I come across kids with, believe it or not, with weight issues. You know, where they wanted to see the kid's medical record because based on the BMI chart, the kid was obese. So I've seen it across the board. So if you got a healthy child right now and they don't have any kind of insurance to protect them, what are you doing? And then we're talking about, well, we're gonna pass the hat for our family members. You got life insurance, your wife got life insurance, or your spouse got life insurance, or your partner got life insurance, but you don't got it on your kids. I had a client the other day, about a week ago. She bought pet insurance for her golden, what you call it, doodle, whatever it is. I'm not a dog person. Like, on your dog? But yeah, that's her family.
Yeah. Simply P loves dog love.
I ain't saying no comment.
All right.
I'm not trying
So
to be
I got
Debbie
another.
Downer, man. I'm not trying to be Debbie Downer with this, but it's just what I just do it so much, I'm just numb to it. So my apologies if that's coming across that way.
No, it's what people need to hear, man.
Yeah.
You have to watch the last episode. Oh yeah.
Okay. I'm gonna give you a scenario, Celeste. say I'm a young married person just starting out, just graduated from college, just got married to my college sweetheart, and she's pregnant. I got my first job, and she got her first job, and we're about to have a family. How would you approach that insurance, the important insurance to me, and how would you tell me how should I get prepared for that?
So if they're first starting out, we're gonna grow together. So they're not ready to make that jump. So it's one of those situations where I say at a minimum, now we'll talk about the auto. My college kids, my renters, yeah, you can have a state minimal. You can drive maybe with 5,100 because guess what? Yeah, you're okay. But at least starting out, Mary, I'm gonna say, hey, let's put our auto limits at 100, 300, okay? Let's then look at the home. Depending on how the home is set up, there's multiple ways you can insure your home, okay? So from what I look at, depending on how the neighborhood and the area, for my folks that live in Williamson County, or now, shoot, pretty much in Davis, anywhere in Davidson, but Williamson and Davidson, the home market is just crazy stupid. So I just go ahead and put a guaranteed rebuild cost on most of those products that I can. So what that really means is, let's say we got their dwelling set at 400,000, and the developer or the contractor comes back and say it's going to cost us 500,000 to rebuild this home. With that guaranteed replacement cost, if they come back and say now it's going to be 550,000, guess what? That person never has to worry about taking out a construction loan. But going back to the family and them starting out, we're gonna grow together. So what I'm gonna do is I'm gonna look at their house. Say they got a $250,000 home. We're probably gonna do another 25% replacement cost to that. So now you take that 225,000 times that by 0.225, whatever that number is, you add that on top of the dwelling cost, that's going to give them the adequate coverage. But now the thing that makes me a little bit different is that I'm going to be talking to them periodically. Okay, like, hey, how are we progressing? What's going on? So then what we're going to do is, once you get that promotion, once you get that raise, now we're going to see if we can afford to move these coverages up, and I'm going to explain it to them. I mean, I use Ramsey as an example. He didn't believe in the umbrella theory until, I kept sending him this link. Hey man, read this. But then he goes out with those big boys, the Caterpillar he was hobnobbing with, and they was like, hey man, I gotta have that umbrella. And guess what? He called me out like, hey man, I need to get an umbrella policy. So you grow with your clients. You don't force it on them. You say, hey, here's what you need. And you tell them what they need, and then you let them decide what they're going to do with that. Because at the end of the day, and I say this jokingly, but I love my Google 5.0 review and I love my Facebook great rating. So you would never come across a client that has done business with me and say they didn't know. They knew, they just chose to go a different option. So you got to grow with the client. At the end of the day, Wes, you got to grow with them. Them just first starting out, you can't throw all these products. Like, you ain't ready for that. You just got into the house. So at least let's protect the house. Let's at least talk about the life insurance, and let's at least talk about this. So that way, so in the next 2 to 3 years, as you start to move up, guess what? There's levels to this, right?
Hey, so what is the common misnomer about insurance, man?
It's a ripoff. Don't pay your premium. Insurance company don't want to pay you what they owe.
Yeah,
And
fine print.
right.
Fine print.
Let me. And I'm glad P asked this question, because I think there's some bad agents out there. Maybe insurance is not a ripoff, but there's some bad agents out there that rip people off.
Yes, sir.
Yeah, I would agree. You gotta understand. Here's what I tell people. To become an insurance agent, you don't gotta have a college degree now. Okay. All you gotta do is just go down, do the requirement for the state requirement educational classes, and then I think it's 20 hours, 25 hours, whatever that number is. You take the license, voila, you are an insurance agent, just like that. And you got a lot of agents that, to me, they're salespeople. And the thing that I've seen, to me, this is just Celeste's opinion, the good ones come from the claims and underwriting background. They've been in this forever. I don't care if an agent's been open for 40 years and he's never worked in that. He's never did what I call the grunt work. He's just vicariously living through his client's claims history. Versus as me being a claims adjuster for Nationwide for 10 years, a fraud investigator, a training manager, an underwriting manager, a bodily injury adjuster, an operational manager. When I touch this product, I know what I'm talking about. I'm not selling you. I'm saying, hey, this is what you need. Now, if you don't do this, that's on you. Versus you got some people that will sell you. Going back to what we talked about again. People buy from who they feel comfortable from. And sometimes in the Black community, we believe that if sometimes we go to a different agent of a different perspective or a different persuasion, we're going to get a better product, which may not be the case. He or she may just be selling you something to check a box. That's the reason why when you buy your insurance, you gotta treat that like your doctor. You know, you ain't gonna just let your doctor say, "Hey, man, we're gonna dig in you and figure out this out." You gotta trust that person. But we treat it it's so lax the way we treat it because it's not important because everything in our community now has been go to the internet, boom, 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 put it in. I got a price, boom, and move on. I got one example, and I'm gonna shut up. Young man here in Nashville, contractor, the brother's booming. Y'all been to some of the spots that he developed here. Came to my office, went to Next Insurance, and brought his general contractor policy. I was laughing so hard, I forgot he was in my office. He said, "Man, you laughing at me?" He said, "No, I'm not really laughing at you. I'm just laughing at what you brought." But I was laughing at him. But I set him down. We got him right, and he's now this dude is. He's killing. He's getting jobs in Brentwood, jobs in Hendersonville, jobs in Gallatin. But we grew together. When he came in here, he was just coming up and he was just trying to figure it out. Now this brother is like literally dynamic. He's killing the game right now.
Well, my next question, also, I don't know if this is a misnomer as well, but let me ask you this. Based on a tornado in Nashville, a hurricane in Florida, a tornado in Kansas, does my insurance increases as those events happen? I mean, after those events happen.
Well, see, once again, insurance is driven by a lot of different things. Okay. So I'm gonna use Florida as a great example because
Yep, you killed it.
farmers my contract with farmers, they pulled out of the state of Florida because of hurricanes. Hurricanes in Florida is just rough. I mean, when you live in places like Florida, like New Orleans, I don't understand to this day why somebody want to live 9,000 feet below sea level. You live in a toilet bowl. Okay, one powerful flush is you're gone. In Texas, you got the fires. State Farm has pulled out of Texas. I mean, not Texas, excuse me, California. So insurance is a business at the end of the day. Now we got shareholders that we got to report to, just like you got at Caterpillar, you got at the hospital, whatever we got shareholders. So it is economical, but one loss to not drive what you pay for your premium. Now in Tennessee, one of the things that you're going to start to see, because I do business in Tennessee, Alabama, Georgia, Kentucky, Illinois, Indiana. I'm basically all over now. But it's one of those situations in Tennessee, you're about to see mandatory wind and hail deductible on homes because we have now become Tornado Alley. And so most people don't understand that one claim shouldn't drive your premium. But when you got thousands of people where you didn't pay, let's say, close to $800 million out in claims, that's a lot of money. And so guess what? It's a shared risk pool. So once again, you're sharing that risk amongst everybody in that pool with you.
Yeah, you say it's a lot of claims, but also I'm paying $3,000 a premium every year or whatever a month. So it shouldn't be an issue. I'm as a customer. That's how I'm looking at it.
This is what I tell people now when we talk price. Year one, yeah, I would try to negotiate. Now I don't do that anymore because I said, here's the deal. You're giving me $3,000, or you're not even me. You're giving the company $3,000, and you got a $200,000 investment. Who's winning on that? And we have to rebuild your house.
Depends on how long.
So if you want to cut corners, because believe me, there's somebody that's gonna go out there and they're gonna say, hey, you want to get this lower? It's like when you go buy a used car. They say, what the price you want to pay? They keep going back into that room and just beating the hell out of your credit. They give you that price that you want to pay. Insurance works the same way. So if you want to pay something lower, that's where I say if you do apples to apples comparison. You know, I had a guy the other day, he got a year policy. Do you know how hard it is to find a year policy now? Because most of the carriers now have gone to 6 months policy due to this economic that we're in, this current economy.
Yep.
So it's one of those situations. If you're looking for something lower, you're going to find something lower. But at the end of the day, when you start going lower, and I'm just saying this hypothetically, typically when you start cutting price, you're cutting coverages. You may not feel it in the front end, but on the back end, you're going to feel it when you have that loss.
Yeah. So would you call insurance a financial planning item?
You got to have it. The more wealth you accumulate, some of my more wealthier clients, I got a guy with a $2 million house. He said, look, man, I don't care about that. Give me a $10,000 deductible. Everybody can't say that.
Right.
So it just depends on where you are financially. It depends on where you are from a budgeting perspective. But you need something, because if you are what I call a mid management level or mid in your career, and you don't have those kind of funds to protect yourself if something were to happen where you can just go in your pockets, then you got to have insurance. It's just that simple.
Now, let me ask everybody, because we got a lot of great knowledge and wisdom from Mr. Ware. Are there any, I guess, specific questions that any of us have for your auto?
Only, but my question on the natural disaster, if something bad happened here in Florida, does it affect Tennessee and vice versa? As far as, because you said it's a
No.
collective pot of money.
No.
So
Each state stands on its own merit from a rating perspective. But and I use Tennessee because in the past 4 years, really 5, the economy here has just shot off. It's been crazy. So the one thing too, I'll tell you guys, if you guys are seeing increases in your auto insurance, this is the first time ever in America history where an automobile has become an appreciating asset. It used to be said you drive a car brand new, you drive it off the lot, you lost money.
Mm-hmm.
That's not the case anymore. I got a gentleman that got a 2012 Chrysler 300. He got 13 grand for it. I'm like, dude, that's a $7,000 car.
Mm-hmm.
I got a guy the other day with what I call a base model CarMax SUV. He got 45 grand.
Yeah, I heard about that.
So
But how does it affect my insurance though? They're gonna make it go up because now the value.
manufacturers are charging more for the parts. So if the manufacturer's charging more for the parts, if the body shop's charging more for the labor, the hospital's now charging more for ER visits and radiology. You go to the emergency room, you're paying the ER physician and the nurse physician, and then you still got to pay the ride in the ambulance. That's 5,000 to 10,000 right there. And they're charging more for their services. So guess what? In this current economy, when everybody's charging more, guess who all feel it?
Everybody, yeah.
Everybody.
Everybody feel it.
I got a question for you. Well, I actually have 2. The first one is, do you recommend, or for your clients, do you try and bundle all of their insurance where they have everything with you? Or what do you recommend? I would imagine it's an independent or an individual decision, but
Yeah, it depends, man. Because like sometimes it just like I got a family right now in Kentucky that reached out to me, and I'm looking at their stuff before I start with this, and I'm gonna tell them, look, you need to stay where you're at. Call your agent and have him do what you need to do on your end. He's gonna thank me for it later. Bundling is a good idea. Don't get me wrong, but it just depends on what the family is. Because if you got youthful drivers and you got just expensive stuff going on, that could be, it may be cheaper to stay where you are from an auto side and still have your home somewhere else. It just depends. Now, I would like to bring it all in house, but here's the deal: people, because I write stuff just besides farmers too. So I get families that come in here, and let's say, especially now with this current economy, I got a lady who's been with State Farm for 20 years. Farmer said no to her, so I took her out to another carrier. She's sitting with American Modern right now. Her auto's with me, her umbrella's with me through Farmers. So it's just a price difference. So you would love to put it all together. It'd be better to have it under one umbrella, but sometimes you got to look at the individual where they are, and then you got to meet them where they are, and then you can just decide and go from there.
okay. The second question that I had is there any place where you cannot offer your services?
I'm pretty much, I'm in the Midwest, the Southeast, West Coast, no. I just try to do where when I was looking at because first I had to kind of like go through some stuff to get where I am. So I just didn't have. I started with Tennessee, then we did an acquisition last year, and then when I took on another office, or I purchased another office, it gave me Mississippi, Alabama, and Georgia. Then I do stuff in Texas, I do stuff in Ohio, I do stuff in Indiana, I do stuff in Missouri. And so it just has more from that standpoint. That's the reason why, man, I'm never at home. I literally live in this office.
Okay.
You never said Florida, so home auto at least you
Nah,
got a
man,
Florida.
nah. Hey, you have Florida, man. Florida and
Hey.
Cali, it's a wrap. It's a
All
wrap.
right.
I got one.
I got a question. I got a question real quick.
Okay.
So if I was in dance rehearsal and I sprained my ankle, how could I get covered from that? That's it.
If you was at dance rehearsal and you spent, hopefully you got you got a health insurance. So you better. I do health insurance too. Hey, we do health insurance too. I got a firm that we broker deals with. I just got one of my guys today. He's an electrician, and we got him taken care of. So I'm telling you, it ain't nothing that comes in here that we can't help you with.
Well, I mean, I'm glad you said that. So, like with Big G, travel nurse, you know,
Yeah.
he's
I got a travel nurse right now. We just got
basis.
her health insurance. Yeah.
Well, not even on the health insurance piece, but I guess even when he's renting out homes for the period of time that he's there, do you recommend renters insurance during that specific period of time for, let's say, travel nurse?
Depends how long he's gonna be there. Because he's just there temporarily. Like I said, G's usually there for what, a month, two. His homeowners insurance will take care of 4. So 4 months, yeah, you could get a little $20 policy a month, so in case something happens. But in that situation, by him being a traveling nurse, his homeowners should, depending on the company, I gotta look at the policy, but it should cover him while he's working remote from that standpoint.
I got one last question for you, Celeste. I know you work with me with this, but can you touch on a short description on how to prepare a family who has a teenager that's preparing to drive?
Patience. But no, I actually got a video that I shared with Wes and Tanya that I shared with CJ. And because I was scared to let CJ drive, man. He didn't start driving until he was a senior. Because at the end of the day, you know, we all want to get our kids to drive, but they got to be responsible. Because at the end of the day, if they go out here and they jack something up, it falls back on you. So I literally showed him videos, or not videos, but a PowerPoint of severe accidents. And this is what can happen if you do this. And in the grand scheme of things, this nice house that we live in, we could pretty much lose everything that we ever worked for because you decide to be immature behind the steering wheel. So I tell people all the time, just because your kid turns 16 doesn't mean they should have the keys to the kingdom. You should make sure on a comfort level that you feel good, because if they go out behind that steering wheel and they hit somebody, they kill somebody, they destroy somebody's property, that accident follows you. Now you're paying for their mistakes. And then the flip side to that is once that kid turns 21, 22, as long as they're still on your household, I've had parents call me up and say, hey, I want to kick them off my policy because I'm paying too much. And I said, no, just have them pay you that difference, because I guarantee you, if we spend them off on their own policy, they're going to be paying more for their freaking car insurance that they're going to probably pay for what the car's worth. So that extra $200 that you're paying, just have them pay you for that difference. But youthful drivers, I'm not a fan of. I tell parents, unless you just know your kid very, very well, which you don't. You know their representative. When they with their boys, they're like, Dapper, what's up? We about to kick it. And while they about to kick it in your car and have an accident on your dime, and your deductible that you got to pay for it. Now you got a loss on your record for the next 3 to 5 years.
Yeah.
That's crazy.
And you got to think about it, man. Like our insurance doubled once we added Xavier. It doubled. And he had been in no accident, no tickets, but it doubled.
Yeah, because kids are stupid.
Just in case. All righty. Any other questions, fellas? Catch us if you like what you were watching, hit that like, subscribe if you haven't done so already, but also catch us on Facebook, Instagram, as well as TikTok at the Urban Retrospect. If you want to review your product, if you want us or have any questions, shoot us an email at theurbanretrospect@gmail.com. Again, thank you for joining us. And as we always end up, we like to say peace, love, and retrospect.
Play the music.
So I got this from Power and Black Tea, so I have to give a shout out. Now let me ask you about Lil Weezy down here, Wes. Where you get that from? Cause it's dope.
Can't reveal my sources.
All right, well, it's still dope.
We have some haters out here.
Black owned, but it's black.
Yeah, I don't know if it's black owned, but hey, we got somebody black
I
owned.
don't know if it's black owned, but
I already got the shirt, Wes. I already got it. I got it in white.
Because I got some J's that have set that shirt off.
hey, I'm dope. I keep looking over here like, shit.
King Cobra.